we are following a developing story out of Hong Kong. Police launching a big crackdown as a new security law imposed by China goes into effect. Eunice Yoon is there and has the details.
U.S. businesses are reassessing their exposure to Hong Kong after China imposed its new national security law on the city. Thousands of protesters defied a police ban on the July 1st anniversary of the Hong Kong handover. Police arrested more than 300 people. Beijing critics believe the law is meant to quash dissent. It covers nonviolent as well as violent activities, threatens life in prison, and suggests tough cases be extradited to mainland China. Most surprising, the law applies to anyone, anywhere, including people who don't live in Hong Kong. Chinese officials, though, say Beijing exercised restraint with this law since it's not retroactive. Separately, China ordered 4 American news organizations, AP, NPR, UPI, and CBS News, to submit detailed information about their China-based operations to the government by next Tuesday, the latest twist in the U.S.-China dispute.
Tensions rising for sure. That was Eunice Yoon in Beijing reporting. So, is China risk back in play as we head into the second half of the year? Tim, we turn to you. We always know you were an ambassador in a previous iteration of Fast Money. So talk to us about that trade. Yes. Is this worrisome for you on that front?
Well, it is worrisome, underlying that this is the 23rd year anniversary of the handover of Hong Kong from the British. I mean, it's not lost the irony there. And this is an aggressive crackdown, and this is a sad day. It's a very sad day. I have a lot of friends that have worked out there and done business. A lot of folks have left that city over the last year. If you look at the FXI, which is the ETF that is the Hong Kong traded Chinese mega cap stocks, and that includes some state-run banks, et cetera, China Construction Bank, Tencent, et cetera. That's actually about to break out through the 200-day. And if you look at emerging markets, for the most part, they've been struggling and underperforming, but looking at some of the news flow over the last 2 months and just a downward trend in volatility as breakout time. So I think this is not going away. I think this is going to be an issue for the world. It should be an issue for the world. It's a sad day, and I think whether that has an impact on asset prices for emerging market stocks, especially those traded in China, I'm of the view that the mega cap tech stocks in China continue to go higher with those in the U.S. and around the world. That trade is not getting derailed, and there's a lot of liquidity in all parts of the world, but in the local markets in China as well.
All right, well, let's talk more about these rising risks with China. Joining us now is Longview Global's Dewardrick McNeil. He's a former senior China policy analyst for the Department of Defense. Welcome, Dewardrick. I mean, this is a big deal. Hong Kong has been a trade center around the world for so many years. Does now this action by China cast into doubt Hong Kong's viability as a commerce center for East Asia?
Don, thank you for having me, and thank you for the question. Look, I think the geopolitical risk of doing business in Hong Kong has increased exponentially with the passage of the national security law. I think companies are going to have to really ask themselves, what are the risks and what are the rewards to staying? And do we have a contingency plan to move perhaps to somewhere like Singapore? But I agree with the previous guest that this is a long-term issue. We have now Hong Kong being added to a list of other irritants in the U.S.-China relationship. The trade war, of course, we know about, 5G and the tech war. Now with the passage of the National Security Act, as well as the U.S. Congress's passing of the Hong Kong Human Rights and Democracy Act, which requires an annual report on whether or not Hong Kong has maintained its freedoms, means that this is going to be with us for a while. And so if I were sitting in the C-suites, I would really start to assess what are my risk rewards, what are my geopolitical risks with remaining in Hong Kong. And I will say, as the reporter said to us on the ground, the expansiveness of this particular law gives great concern to many of us. As we understand it, residents, non-residents, you can even trigger a violation, Dom, from sitting here in your home in America. So I think it's something to pay attention to. I don't know that businesses are prepared to pull the parachute just yet, but I can promise you that if you have any interest in Hong Kong, you are looking at how you mitigate or eliminate, if possible, your geopolitical risk.
You know that right now, Dwardrick, that there are policymakers on both sides of the Pacific who are trying to say, hey, calmer heads will prevail. Let's work through this. But let's talk about the real kind of like, I guess, black swan type risk. Let's say that China says, you know what, we're just going to take it over. It belongs to us anyway. We're just going to make it part of China. It's no longer a special administrative region with its own, one government, two systems approach. Does China have the leverage to just take away the commerce center that is Hong Kong like that in this kind of a world today?
Certainly they have the leverage and the legal right to do so. Or as we've seen with the national security law, they will just pass a law that gives them that right. But let me just say, having the ability to do it and the incentive to do it are two different things. Look, Hong Kong, despite all the disruption that we've seen, is still extremely important to China's development. China had a big plan, if you may remember, some of your viewers may remember, for the Greater Bay Development Region, which will link Macau, Hong Kong, Zhuhai, and the metropolis Shenzhen just to the north. So this disruption in Hong Kong certainly poses risk to China's development plan. Hong Kong was also the finance center for a lot of the Belt and Road Initiative that the Chinese were looking to unveil over the next couple of years. So I don't believe that a pure takeover of Hong Kong, meaning boots on the streets, military equipment, what we constantly conjure up when we think about Tiananmen Square, is going to happen here in Hong Kong. In fact, I think this law has shown Hong Kong citizens that Beijing is serious enough to deal with this through law enforcement of legal means. As strong as these things are, they're not tanks in the streets. That doesn't give us much in the way of solace. But I don't think we're going to see an armed takeover of Hong Kong. But I don't think you need to do that. Well, we've seen the chilling effects here.
Well, we would have to understand that the world would have to respond if you did see tanks in the street, so to speak, in Hong Kong as well. Dwardrick McNeil, thank you very much for those thoughts on China. We appreciate it.
Thanks for having me, Don.
All right, well, let's trade this, folks. I mean, Dwardrick brings up some pretty dire possible scenarios. Dan, Nathan, I saw you nodding quite a bit during some of those discussions that we were just having right now. Is this a scenario where the big banks of the world, right, the ones that we all know of, I'm not going to cite them by name, but everyone's got a presence there, do they have to rethink what's going on given China's reassertion of force in that particular region?
Yeah, no doubt about it. I think we also have to rethink who the new ambassador is on fast money, and I think his name is Dwardrick, because that was pretty succinct about what's going on there. Sorry, Tim. I'll just make one point about it. I mean, when you think about what's going on with our markets, what is one of the potential big headwinds is that we're in a Cold War with China right now. How are we going to react to what some of the human rights abuses are going on there? That's really a big question. And then how does that affect our supposed trade deal or trade situation with China? And what does that do to global growth at a time where it's really important that we remove every impediment to global growth? So I honestly think this is something really important for investors to keep an eye on. Your guess is as good as mine. I don't think it's going to turn into a hot war, but it's going to be cool for a while until we see who the president of the United States is in mid-November.
So Karen, I would like to turn to you here as well. We're speaking about Hong Kong in the greater context of the U.S. relationship with China. But in many ways, that relationship with Hong Kong is the tip of the iceberg. There are also headlines coming out with regard to human rights, alleged human rights violations, we'll call them, with Uyghur Muslims in the region, other human rights violations as well. This is not the first time that the U.S. will have to stand up to something that's coming out of China. It's not just Hong Kong, is it?
No, it's not. You brought up the Uyghur and the trade deal, right? So, but for Trump, he's walking a very high tightrope in that he really wants to show how hard he is on China, what a hard line he would hold, and point out that's one of his strengths. On the other hand, he is definitely focused on what the market is doing, and we got a tiny glimpse of it a week or two ago when Navarro said something that was sort of off message about you know, we don't have the first part of the trade deal was sort of falling apart, and then the market was down 3%, and then within minutes they're like, no, everything's fine, everything's fine. So I don't know which of those things weighs more, his wanting to be a hardliner or him caring about the market. My guess is that he cares more about the market and that will dictate policy, but I don't know. It is a question mark out there.